Yeah, today we will start with GST accounting. Then what we will do, we will be doing financials in parallelly with accounting standards. Wherever it is required, we will take up the accounting standard and financials schedule 3 format we will discuss. Okay. So you may be asking me, sir, it is almost 7 years. GST is implemented and still why? What is there great in GST accounting? Okay. See, I will tell you, different companies follow different accounting policies without disturbing the fundamental principles of accounting. Okay. So it is always good to understand how many ways we can do the accounting. Okay. Depending upon their process, depending upon their business model. Okay. Accounting entries can be structured by themselves, keeping in line with fundamental principles. Okay. So whatever I am discussing now, maybe you might be following it already. Well and good. If you are following a similar process, then you can tell me. If you are following different way of accounting, you can tell me. Even I will learn it. Okay. If you feel something is better way than what I am telling. Okay. Everything may be right as far as debit and credit is concerned. What you are following is also right. What I am going to tell may also be right. But this is one way of accounting. Okay. So even in business, other entries also, different companies follow different entries. Different accounting entries. So if you see, in GST is providing us couple of ledger, that is electronic cash ledger and electronic credit ledger. Okay. So GST department is very proactively giving us what is your transactions in their books of accounts, right? Ledger means that is what we understand. So department is saying so and so X company is there. X company cash ledger in their books of accounts and credit ledger in their books of accounts. So they are giving you the ledger on real-time basis. Okay, so you have access to the books of accounts. This is one aspect. There are various reports also which are getting generated from GST portal. One of that may be tax liability and credit ITC comparison. Okay. This is a ledger and this is a report tax liability and ITC comparison. We will see from system also. If you feel it is all known, not much, then we will restrict to one class, today's class. If you feel we can do the next class also, where I will show you entries, whatever I am teaching you, practically I will show you. Okay. So this is another report which department is providing us, and another report is say electronic liability register. This is register, this is kind of a report, and this is a ledger. Okay. All these details are available on real-time basis from department. If I am an accountant, I will see that my entries are matching with these reports or ledger or register, whatever it is. Okay. If I am an auditor, I will check whether the entries what are taken by the business is in line with the entries what are given in the ledgers. Okay. So with this initial introduction, what I will start with, see, these are all regular entries which you will be doing it. So suppose if coming to purchases, we have chances that few purchases may have input and few purchases may not have input eligibility. So there are chances that particular business can avail the input credit, and there may be certain items where the input credit is not available. In case input is not available, then the accounting entries will be like expense account debit. Here it will be including GST to vendor account if TDS is applicable. So I am not going to TDS aspects and all. So I am just closing it to vendor. If it is applicable, you will liability of TDS. Otherwise, you will not create a liability. But what I am trying to impress upon here is expense account debit to including GST amount, because in this particular purchase input is not available for whatever may be the reason. Okay. So in that case, what you will be doing it is expense account debit including GST amount. So entire amount you are taking it into expense to vendor account, you are creating the liability. Fine. Though this entry is correct, I have been always telling you that use technology. Okay. Why we have to use technologies? For better performance and better reporting and compliance, and our job will be easy. If you see in GST returns, you have to show what is the purchases on which you have not availed the GST. If when you are making the entry like this, expense account debit to vendor within GST, there should be a backend report which has to be generated, so that while filing 3B, you are able to capture whatever purchases on which you have not availed the input, right? So even in Tally, see, I have not used practically Tally much, but forget about ERP, SAP and all. It is more, excuse me, there is power cut here. Let us break for a couple of minutes.
Okay, sir.
Yeah, we will continue without board. Okay.
Okay, sir.
Usually power doesn't go. I don't know why today. So if it is not coming in 2 minutes, that means I don't know. So let us continue, not waste time.
Okay, sir.
Okay. So what I was trying to tell you that whenever there is no input credit, so the usually what is the entry we do is expense account debit, including GST to vendor account. Okay, but there should be a back-end report where you are able to identify what are the purchases on which input is not availed. This is required for our monthly or quarterly 3B when we are filing the return. Okay. So this is one aspect of entry where there is no input. Second thing is, in the given example, we have taken where the taxpayer has got input credit, but few of the purchases he has made on which input credit is not applicable. Okay, but assume if all the purchases, suppose that particular business department, I mean GST, as per GST norms, input is not available completely. In that case, every entry will be expense account debit to vendor account. So how do you identify where there is a GST and where there is no GST, right? So definitely there should be a report which has to be generated backend so that you are able to capture the data for our GST returns. Okay. Now I am coming to now where input is available. Okay. I already started where input is available. So in case of input available, again, there is a clause where there are two important aspects which we see: whether the payment has been made within 180 days from the date of the invoice, and whether the same invoice is being reflected in 2B. Fine. So again, in any of these aspects, we are not eligible. Okay, both the aspects have to be satisfied. It is not any one of the aspect. Both the aspects has to be satisfied. Then only you will be eligible for input credit. So you may ask me why I am teaching all these things. So before I get into the entries, I want to just brief about the input credit. Okay. So this is also one of the important thing where we are either we are eligible to take input credit or we have to postpone taking the input credit. Fine. If you make all the entries in one account, tomorrow when department says, please show me out of your total purchases of 10 crores, which month you have taken input credit and which month you have not taken input credit. Is it easy? Huge transactions, entire year, so many purchases. Okay, and suppose accountant has changed. Okay, you have newly joined in the organization. You don't know where are those Excel workings. Okay, all these problems will be there. If you structure your accounting entries in such a way that there is no dependency on any Excel working, you can easily explain to the department which invoice you have taken input on which month. Okay, so we are clear that input can be availed only when payment is made within 180 days and also it is reflecting in QB, correct? So now I am coming into entries. See, in case of no input, there should be a backend report where it should give you the report where you have purchased goods on which you have not availed the input credit, and what is the value of the purchase, taxable value, and what is the respective GST amount, maybe GST, GST, whatever it is. Okay, from there, that report, now even I believe Tally also is giving that. You can if you do your Tally settings properly, it will generate the 3B in Tally in such as per your accounting entries. Okay, now coming to where input is available and where we have to satisfy all these conditions to avail input credit. So what I am trying to say, if I am making any purchases, generally what is the entry we are taking? Purchase account debit or expense, whatever it is. Purchase account debit, CGST input credit account debit, SGST input account debit to vendor account, right? This is the first entry usually we are making. And when we are making sales entry, we are saying customer account debit to sales account to CGST payable account to SGST payable account, right? This is the entry. And month end, depending upon the people, they will transfer all these input credit entries to CGST payable, SGST payable account, and they will file the returns, 3B returns. Okay, but this is not the right way, what I am trying to say, because in that particular month you have made purchases of 1 crore, but you are taking input credit, say only if 1 crore, it is, for example, average rate is 18%, so 18 lakhs, but you are taking input credit of 15 lakhs. Now, nobody will know from that entry, this 15 lakhs pertaining to which bills, right? And even for the balance 3 lakhs, why you have not taken input credit also, right? So it is, if you route the accounting entries in such a way that you are able to easily identify. Okay, so if you can transfer this input credit, whatever input credit entry, purchase entry is there, first it will go into input on CGST input on purchases. Okay, instead of just CGST input, or you can put input also, there is no problem. You have to document it, whatever the scheme of entries you are taking. If you document it, see, nomenclature of the account, nobody can presume. Okay, so if you document your accounting entries, see, this is the scheme of entries for GST in this organization. Then whoever new person also comes and joins the organization, you can give this document. This is the accounting policy document, you have to follow this. Then that will also will take the same accounting entries. Okay, so purchase account debit, CGST input account debit, SGST input account debit. This is the first entry. Now, out of 18 lakhs in the example, whatever we have taken, if we are taking 15 lakh rupees as input credit, okay, either sorry, now 15 lakhs out of 18 lakhs, we are taking 15 lakh input for the current, that particular month, whichever we are discussing. That time, what you have to do, CGST input availed account debit to CGST input account. Here, you should be able to identify invoice wise in this entry. See, like how, see, again, I am telling you, I am not keeping in mind with respect to Tally because I don't have much knowledge about Tally. But no doubt, even Tally also provides this, gives this provision to transfer entry bill wise from one GL to another GL. Okay, see, Tally is right. Tally is popular even today, irrespective of any ERP, right? So it is no way lesser than any other accounting package. So maybe we do not know how to do it. If we ask the expert, they will be able to tell you. So as per whatever out of 18 lakhs, 15 lakhs, you should be able to transfer. Why I am highlighting Tally here is most of the clients are using Tally only because it is the better priced package, accounting package, okay, and more convenient package, and more people knows it easily. So this is the that is why I am highlighting with respect to Tally, okay. So this whatever 15 lakhs you are taking input credit. So what will be the entry is CGST. I am taking only one account, either CGST instead of all three accounts. Same entry will follow for other SGST and IGST also. CGST input availed account debit to CGST input. That means whatever the purchase balance of 1 crore. Yeah, so 1 crore 18 lakhs, purchase input of 18 lakhs. I am transferring bill wise from purchase input account, that is CGST input account, to CGST input availed account. So tomorrow if department comes and asks me, what is the basis of your 15 lakhs? Out of 18 lakhs, you have 2B, you have 18 lakh credit available, and you have taken only 15 lakhs, which are the bills you have taken input credit, then I need not search for any Excel working. I can just take out the report of that particular GL ledger, that is CGST input availed, where it will give me invoice wise details in that entry. Then I can say, sir, these are the 100 bills on which I have taken the input credit. You need not depend on any person whoever has done the working. Whether he is there in the organization, he is not there in the organization, is not at all irrelevant, because the data is available in the accounting books itself, which you are protecting it for 8 years, right? So this is how you can transfer from input, okay, to CGST availed. Okay, you have availed the CGST, but for payment you have not released the payment. See, 2B is there, okay. Payment, how many days you have time? 180 days. Still you are eligible unless you don't make the payment on 181st day, then you have to reverse the input. So your organization is very good, very prompt payment they do. There is no worry about the late payments and all. Once you accepted the goods, you accepted the bill, that means the payment is going to be done as per the payment terms, 30 days from the date of invoice, 60 days from the date of invoice. Maximum nobody gives credit period more than 90 days. And as per GST, you have 180 days credit period. Okay, so you are very free to take the input credit. So you have taken 15 lakhs input from input availed to, you are utilizing this 15 lakhs to utilization. Okay, if for any reason, if you are not taking 15 lakhs, you are availing 15 lakhs, but you do not want to utilize 1 lakh for whatever may be the reason. Okay, then you can take this utilization amount to a different account. Okay, it is always, so you may think that how many entries you have to do, but by doing this you are making your accounts foolproof. Okay, there is no dependency on anybody. Everything is available in the system. Okay, so first you have purchased, you are eligible for input credit. Next, you are availing the input credit out of the purchases. Okay, and you left 3 lakh purchases input credit because 2B it is not available or whatever it is the reason. And out of 15 lakhs, say you are utilizing input credit only to the extent of 14 lakhs, then you can transfer from input availed to input utilized to for 14 lakhs. Then 1 lakh will be there in your credit ledger balance, which will, because you have availed it in the 3B, but you are utilizing only 14 lakhs. Okay, so even utilization, what will happen in case of utilization, you can transfer the utilization bill wise, and then from there you can take it to clearing account also. Why I am telling you, bill wise can be identified only till the utilization period only, utilization stage only. See, when you are utilizing the credit, it cannot be bill wise. Can it be? Because your liability, say now I told you to avail 15 lakhs input credit, but you are utilizing only 14 lakhs. If I ask you out of 15 lakhs, which bill you have utilized to the extent of 14 lakhs? You can't say. It is not possible. Why I will tell you, bill wise it is not possible for utilization. Okay, whatever you are eligible, you have taken input credit, but you are utilizing 14 lakhs because your liability is only 14 lakhs. You cannot match your liability bill wise with your input utilization. That even you have to explain to the department also. Okay, because your input liability will keep it is in no way relation to your bill wise purchases, right? So utilization part you cannot do bill wise. It will be always lump sum amount only. But till the time of availment, you can have bill wise. Then you need only 14 lakhs to be utilized this month. So you will use 14 lakhs. Then you will transfer 14 lakhs from input availed to input utilized. So that time what will be the entry? Input input utilization account debit to input availed account. Okay, this will be a lump sum entry. Then this 14 lakhs, if for whatever may be the reason, if you are able to identify whatever the 14 lakhs you are utilizing, say for our example, you felt that though your liability is more than 14 lakhs, still you are using 14 lakhs only because 1 lakh credit, you are doubtful whether you will release the payment to the vendor or not, then you can transfer the input availed entries to utilization also bill wise, where there is information is available. If you are eligible completely for 15 lakhs, still you are utilizing 14 lakhs because your liability is less than 15 lakhs, then there is no question of invoice wise input utilization. So whatever input utilization you are taking the amount to utilization, then it will be lump sum amount. Then what you will do, from utilization, you will transfer this money to a clearing account. Okay, clearing account will be zero always. I said all clearing accounts should be made zero. That is only a temporary parking of amount for the purpose of closing. That's all. Okay. So what you will do after taking to utilization, then you will say CGST clearing account debit to CGST utilization account. And what you will do, your liability also for that month, in our example it is 14 lakhs, CGST payable account debit T to CGST clearing account. Okay, this is how you can make the entry. Then you will have bill wise details till the point of utilization. Wherever it is possible, even for utilization also you have breakup of entries. Where it is not possible, where you are using as a lump sum amount, it will be a single entry, and you will mention in narration that so and so reason there is no bill wise track for this particular utilization. If you are able to do for utilization also bill wise, it is well and good. Though the number of entries are increasing, okay, this is monthly once only you will do, right? But it is very useful from organization point of view. It will create a record in your accounting system itself that all the data backup. Any doubts you have?
No, sir.
Recording in progress.
See, now power has come.
Hello, sir. Sir, please unmute it, sir.
Sorry. Okay, purchases account debit, GST input account debit to vendor account. Next entry will be what I was trying to tell you, to take this GST input to GST input availed. This is what you will be taking as input in 3B. Input availed, they will go in table that A, B, C on others. So this is the value you will take it. You are availing the credit to GST input account. So this amount, say in whatever example I have taken, this is 18 lakhs, but I am availing only 15 lakhs. Okay, out of 15 lakhs, I am utilizing only 14 lakhs. So again, after this, next entry will be GST input utilization account debit to GST input availed account 14 lakhs, 14 lakhs. This is availed account. Okay, this is 14 lakhs. So this 1 lakh, whatever balance is you are getting here, the same 1 lakh will show in your credit ledger also, because you have availed 15 lakhs and utilized 14 lakhs. So whenever you see the input availed account balance should match with your electronic credit ledger balance. Okay, by doing this, it will keep, you can, reconcile your ledger with your GST department ledger. See, final account should always get reconciled with the third party. If it is debtors, you get balance confirmation. If it is creditors, you get balance confirmation. And department is upfront providing you all the ledgers. So you should try to match this with your entries. Okay. Then after utilization, okay, there is no balance in utilization, right? You have used it for your sales. So when you are doing sales, sorry. Customer account debit to sales account to GST payable account. So though it is one additional entry, I prefer that GST you take it to clearing account. GST clearing account debit to GST utilization account. And you bring this GST payable also, GST payable account debit to GST clearing account. Then this clearing account will become zero, whatever liability, and whatever you are utilizing, you are taking that also to the clearing account, then it will become zero. In the same way, in next class, I will tell you, suppose if it is a cash ledger, then I will show you the example. Okay, I will see that in next class to complete it, otherwise it may go for another class. It is very useful. I will show you a live example of one of the, I have just created the entries in Tally. Okay, I have not created bill wise because it is just for explanation purpose. Okay, so you how it will be useful, you will know. And I told you, this is not any standard is not prescribing to make all these entries. This we are doing this entry at any stage. See, here you have bill wise details, whatever 18 lakhs input you are taking, you have bill wise details. Anytime you can give, because you are creating the entry bill wise only here. Whenever you are making the purchase, you are making the entry, and this money is getting accumulated. Fine. Rather just shifting this money to liability, usually people does that, this input 14 lakhs liability, transfer from input to payable account. It is not the right way. Just add 2-3 entries. This is, see, this you are doing monthly maximum 5-6 entries, that is monthly. Okay, so it is worth doing it. Okay, so what I am trying to say, just transfer bill wise details from input to input availed, and if possible even from input availed to utilization, and then you transfer to clearing account, so that this liability is also bill wise, it is getting through clearing account and it is nullified. Okay, just think of it. If you feel any better way of accounting, you can tell me. Okay, shall we wind up today's class?
Yes, sir.